All right, in today's video, we're going to be going over swing failure patterns once again. There's been a ton of new users that have joined the community recently. So in this video, I'm going to break down exactly how you can catch a swing failure pattern to a T. And this is probably one of the most simple strategies. The hardest part is the execution, but with our indicators, it makes it very, very easy. In a lot of trading videos, you'll see people talk about this, but they won't actually go over setups in real time. So we're going to go over a setup that we're actually in on right now inside the VIP community, as well as a few other setups I had posted in advance in the Pro Discord. Now, if you would like access to our community and the trading indicators that we use, be sure to click the first link in the description below. Okay, no one is doing it like easy. I promise you guys, we're posting these in advance and our members are crushing. In fact, I'll throw a little video up on the screen here of today's results using this one trade. This is a swing failure pattern that we had posted in the high risk channel inside of the VIP. Like I said, I'm going to go over a few other setups inside of the Pro Discord as well. All right, so a swing failure pattern is a failure of a key level or pivot. All right, so we're going to type this out. A swing failure pattern is a failure of key level, right? Very important. That's a key level or a pivot, right? Key level or pivot. And we're going to go into what that actually means, right? Because if you're trading swing failure patterns, you need to know the definition, right? What you're actually looking for on the chart. Now, I'm going to go over the best type of swing failure patterns that you should look for, because there are certain instances like the one I'm going to show you on BLZ that tend to play out better than other swing failures. All right. So now the best swing failure patterns to take are going short, right? So for best accuracy, or I should say for highest accuracy, right? We want to look for short trades. For highest accuracy, short trades. All right, so that means we're going to be entering short positions on these swing failure patterns. Not that you can't do this on longs as well, because for example, right here on BLZ, I can see we had a nice swing failure going long. Actually, if I draw it from this wick down here, you can see we had a very nice swing failure pattern to the upside. Right, we have this very nice swing failure pattern to the upside, almost 200%. Again, I'm on the daily time frame right now. Now, speaking of time frames, let's talk about the best time frames to use this on. All right, the best time frames to use this on are the 4-hour plus time frame. The 4-hour plus time frame. Now, the higher, the better. Keep in mind, we're not entering on this time frame. We're going on this time frame to identify the key levels and pivots. Then we go to a lower time frame for entry. So keep that in mind. But to start, you always want to go to a 4-hour. Honestly, I'd recommend even a daily time frame to find these key levels and pivots. All right. Hope that makes sense. Now let's get into an example, a recent example on BLZ. So we had posted this, like I said, inside of the VIP community. We are looking for a swing failure pattern of this key pivot right here. Now, why this level in particular, right? There's a ton of other levels, right? This could technically be a key pivot. This could technically be a key pivot. Why are we taking this key level up here? This level is the most extreme point in the most recent price action. If we just look at the chart very briefly, we can clearly identify that this is the highest point on our chart, where we had seen a strong rejection of previously, and we can also tell that there's a ton of selling pressure in this general zone, right? A ton of selling pressure. We had actually wicked into the zone multiple times, telling us that there are sellers in this area. Now, if we look at the move up until this level, you can see that we have this very strong impulse move to the upside. Now, this is called a scam move, right? This is called a scam move. This is 100% manipulation, right? This is not based off of fundamentals. This is not based off of technicals. This is strictly whales manipulating the market. So when you see that you have a strong move like this, kind of out of nowhere, going right into that large resistance zone, right into that key pivot, we can look to take shorts there to fade the retail. So how do we actually catch this swing failure pattern, right? I think we're down, right? 8% with no leverage, almost 9%, still going down. We're still in this trade. How are we actually able to catch this trade? Now, a lot of you may think you can set a blind limit at this level. That's one way of doing it. However, I don't recommend doing that, because for all we know, price could keep on scamming upwards and maybe we get a swing fail of this key pivot, for example. So we don't want to set a blind limit. For the most optimal entry, we want to go down to a lower time frame. So 1 to 5 minute time frame for our entry, right? The 1 minute to the 5 minute time frame for the entry. Now, keep in mind, this happens very fast. So you need to be on your toes. You need to be alert when price is reaching these levels. All right. Now, keep in mind, there are other pivot points that we could potentially take a swing failure pattern at, right? For example, we see this as a recent high as well. We see a strong move to the downside. You can see that there are some wicks right here. There's selling pressure in this area. It's also in our key fib zone. I can tell by just looking at it. And you can see you would have caught a nice swing failure from this key pivot, right? Could have caught a nice swing failure from that key pivot. However, that is not the most extreme pivot because we still have liquidity up here at this key pivot. So really, this is the level that we want to look at when we're taking a swing failure pattern. And you can see it tagged right into that level and dropped. So let's go down to a lower time frame, a 1 to 5 minute time frame, and we're going to be looking for that perfect entry. In this instance, it tagged that level to a T, right? It tagged that level to a T, grabbed the liquidity, creating an equal high, and then came down literally 12%, right? It won't always do this. So this is when we use our EzAlgo trading indicator for more confluence. The reason most trading indicators don't work is because people are not using them correctly. They're not using them when price is at a key level. They don't understand the fundamentals of price action. So of course you're gonna get burned. You can't just strictly follow buy and sell signals, but when price is at a key level, when you're looking for a swing failure pattern, you can by all means use trading indicators to help you. Obviously, the trading indicator that I recommend is EzAlgo. This is my own creation, and this really helps with catching swing failure patterns specifically due to all the confluences that we have. So let's turn on the EzAlgo trading indicator, and we're actually going to go to the Heikin-Ashi candles. Now, some people don't like Heikin-Ashi candles for the fact that it takes the average. That's totally okay. I use Heikin-Ashi candles when catching swing failure patterns, and there is absolutely nothing wrong with it. So you can see price tags this key pivot that we're looking at. We can see just from the candle structure, even on the Heikin-Ashi candles, that price is not breaking through this level, right? Price keeps rejecting this level. This is your first sign that, okay, a short position is going to be valid around here, right? A short position is going to be valid. Then you look down at the Easy Oscillator, which comes with our EzAlgo bundle. You can see we're making bearish divergences. For the most optimal entry, I would have entered right here on the confirmation of this bearish divergence. You can see price is making a higher high right into this key level that we're looking to take a swing failure at. And you can see we have this nice 3 drive playing out, right? A 3 drive is a bearish pattern. It's when price is making 3 higher highs while the oscillator is making bearish divergences. So this is a valid 3 drive pattern as well. So now we're starting to see some confluences that, okay, price can go down from here. And then for the final confirmation, we get that EzAlgo sell signal. So this would be your entry. In this case, your stop loss is going to go above this swing high. And you can see we also got a sell signal on the 5 minute. Before that optimal entry, we're gonna go down to the 1 minute. This is our invalidation level. So if price comes back up here and stops us out, then our trade thesis is invalid. So now you're in the trade, your invalidation level is set, your stop loss is in place, and you can simply let it ride. The reason we go to the 1 minute time frame is for that confirmation, is for that entry. But once we're in the trade, we can kind of let it ride a bit, and we can look for other confluences to stay in the trade. For example, right here, I can see we have a break of structure to the downside. Right, we closed below this low. I don't believe we closed on this candle, but on this candle, we closed below. Right, this is a valid break of structure to the downside, telling me that, okay, my thesis was correct. We see a break of structure to the downside. We may get another retrace up, but my bias is now short. We get that large dump to follow. And at this point, you can go to the 5 minute time frame just to stay in the trade. Again, we're not worried about this buy signal because our bias is already short. We're already in that short position, expecting price to go down. Taking profits at the recent swing low, which is right here. So this would be your first take profit. Stop loss to break even, and now you're in the trade. You can keep on taking profits on the way down, targeting this swing low for your second take profit. So at this point, you would have already taken profits. Maybe you can wait until the oscillator flips right here, right on this candle. This can be your first take profit right around here. Again, stop loss to break even at this point. Now you have locked in the trade and you've made 9% unleveraged, catching a swing failure pattern. When you see people posting, 1,000, 2,000% gains, this is what they're doing. All right. They're catching swing failure patterns and they're holding the move. They're letting their thesis play out. If you get stopped out, you get stopped out, right? This is a higher risk form of trading, but it oftentimes reaps the highest rewards as well. And with the tools that we have, with the trading tools and the indicators that we have, it makes finding those confluences a lot easier. You can see again, even on the 5-minute time frame, we get that bearish divergence to confirm right on this candle. So you could have got a slightly later entry, and again, price drops. Now I'm gonna go through another swing failure pattern that I posted inside of the Pro Discord. This was a setup that I posted in advance, and the same thing applies. So I'm gonna go over this setup as well. So I'll post a screenshot up on the screen here of what I was looking at and the confluences I had in place. Okay, I had a trendline confluence, I had a key fib confluence, and I also saw that we had this very bearish candle, right? This extremely bearish candle followed by a strong move down with an impulse move back up to this level. So we're still in a downtrend. This is the most extreme point that I can see on my chart. If we were to close above this level, then we would have a market structure shift to the upside. So this is a very key level, a very key point that I'm looking at to take a swing failure pattern. And again, what happens? We had a perfect swing failure pattern. Again, we're gonna go down to the 1-minute time frame, switch to the Heikin-Ashi candles. You can see again, we had a 3 drive pattern. Watch for these 3 drive patterns going into liquidity, guys. These play out more often than not. Perfectly grabbed that liquidity. We had some bearish divergences, and then we have that EzAlgo sell signal for confirmation. So we're gonna enter the short position, put our stop loss above that swing high. Once we're in the trade, we are in the trade, and then we're gonna go to a higher time frame to monitor that trade. Again, it comes down 2.8% unleveraged, followed by that EzAlgo sell signal. If you had missed that first initial entry, you could have entered again on this EzAlgo sell signal on the 15-minute time frame. Right? This is also a valid sell signal because we are still technically at a resistance zone. We had already swept that liquidity. And if we go down to the standard candles, you can see that we also had an EzAlgo resistance level right here. All right. Based on how our support and resistance levels are calculated, we had a resistance zone right here as well. And I can actually prove this to you. If I turn on the EzAlgo support and resistance zones, you can see that we had a resistance zone right here as well. And what happens? Price comes back up. We get that bearish divergence followed by that sell signal. Again, if we want to go down to a 5-minute time frame, we can do so using some higher time frame support and resistance zones. Here you can see it perfectly tags into this resistance zone. This is on the 15-minute time frame, by the way. We get that bearish divergence. That is where I would enter the trade, or you can wait for that EzAlgo sell signal if we switch to the Heikin-Ashi candles. All right, boom, there it is. We get that EzAlgo sell signal on the 5-minute time frame, stop loss above swing high, and then targeting this swing low here as your first take profit, or even the 15-minute support and resistance level. So that would be your first take profit, stop loss to break even, and then you can let the rest of the trade run. And where does it come down? Right into these EzAlgo support and resistance zones. You can literally see how well price respects these 15-minute levels on the 5-minute time frame. But the only reason that this works is because we had identified that key level in advance that we're looking to take a swing fail of. So multiple opportunities. Again, this is a 7% move on leverage. So if you're using 20, 30, 50x leverage, these can really add up. So that is in essence how to trade swing failure patterns using our trading indicators. All right, it's not super difficult. We're giving you guys the setups in advance. In the VIP, we're giving you guys these literally every day inside the high risk channel. This is how you do it, all right? It's very, very simple. The execution is the most difficult part. You can have the greatest setup in the world, but if you don't execute properly, you're not going to get that prime entry. So you need to wait for your confluences, have a checklist of what exactly you're looking for, and then pull the trigger when the time comes. So that's how to trade swing failure patterns. If you guys enjoyed this video, be sure to leave a like, subscribe to the channel for more trading content. I can promise you no one else in the trading space is actually showing you how to do this and showing you guys real trades that people are in, right? We're actually in these in our community. I'm not just going back and showing you previous price action, right? This is what we're in currently. So if you'd like to join our community, hit the first link in the description below, and I'll see you guys next video.